Hello and welcome to today's Dalal Street Week Ahead video. Now, in today's Dalal Street Week Ahead video, we'll be taking a look at three stocks, which is ICICI Bank, LIC Insurance and Kotak Mahindra Bank. I'll share my equity plus option trading plans for them. But before that, let's take a look at what will be affecting our markets this week. Now, the first thing which I want to talk about is Jane Street. Now, Jane Street has been in the news for all the reasons that yes, SEBI has done that and this basically blocked them from accessing the Indian markets and all this. I believe that's going to have a big effect on our markets this week. Number one, they were big in the equities because they had to use the equities to cause the pump. Then they were big on our Nifty expiry day, on our Sensex expiry day. So due to all of that, I believe this week, if you are day trading especially or expiry trading on Tuesday or Thursday, you're trading a bigger quantity, you're going to be seeing a liquidity crunch. Why I say that is these guys are coming up, whatever anyone says, they were coming up and creating a lot of liquidity for the Indian market, especially on expiry days. So all that's has disappeared in one go. All the $2.3 billion of Jane has gone. Plus, there are many other high frequency trading firms which are operating on a similar basis, who are now going to scale back until they're sure that there's not going to be any more trouble coming towards them. So all that I believe, will cause a liquidity crush to come this week. Especially, it will affect mainly the day traders and expiry traders. Positional equity traders, they won't feel it as they're holding a stock, and unless they want to sell, and they're not going to really see that. So that is one effect I believe will affect our markets this week. The second effect is the trade deal. This is on July 9th is when the deadline happens, and what I can see over the weekend, the statements being given by the Indian side and the American side showing the trade deal negotiations have hit a rough patch. However, how I look at the trade deal is from a different perspective. It's right now the tariffs are going to go up. If July 9th they don't do it. And Trump has also said he's sent a letter to 100 countries, one of them must be India. So we'll have to see on Monday's trading session, when that whole letter news comes, that what exactly is the whole effect of that. But the main thing what I see is, if there was a good trade deal, India would still have to pay roughly 10% to export into the US. If there is a bad trade deal, sort of negotiations don't go well, it might go to 20%. But still, that is better than the current what is running, plus what could come after July 9th. So the market is looking at it that way, and I believe a lot of it is discounted already. And that is one of the reasons we have been staying in this range from 13th May. This is if you open the Nifty, any headline indices, or you open any big stocks, like we'll cover ICICI Bank later on, right? They've all been trading within a range. ICICI, in fact, is not even 13th May, it started in April. Right, so most of these stocks and indices have been trading in the box range from 2 months now, and when they go slightly to the top of the box range, the media will say, okay, unbelievable breakout, 300 points rise. When it falls, it'll be like, oh, 500 points dip, unbelievable. But technically, we have been staying stagnant. We have not moved anywhere. So I think that stagnation might now come to an end. Number one, with the Jane Street factor going away, once liquidity dries up, it naturally will affect the markets. Number two, with the trade deal is optimistic for the trade deal negotiations. Even if they go badly, they will still be good for the market. But the Jane Street issue is what is bad for the market. So we're going to have to weigh in and see how things go. In fact, when I explain the stocks today, you'll see the same playing out on that front. So these two issues, I believe, will be affecting our markets this week, and we'll have to see how to play them out as it comes along. As the major thing we have to see is what that letter of Donald Trump is saying, as that will be a huge factor on the markets, especially on Monday and Tuesday's trading sessions. Plus, we'll have to see what is the level of liquidity crunch we have in the Sensex expiry on Tuesday, as that will tell us what will happen in Nifty too. So that's it on that front. Let's take a look at LIC, then we'll take a look at Kotak, and last we'll take a look at ICICI. Now, when I've chosen to take a look at LIC Insurance, is if we see As I said, these things have been in a box range. This one has been from 28th May, not from 13th like the headline indices, as it basically had a gap up and then has stayed in the top part of the gap up the whole time. This has largely happened due to the fact that people watching my videos for longer know this is a high volume bar of mine, and once it forms on a bullish trajectory, usually until it breaks, we'll end up just sort of staying up there. So we have been staying up there, but now I believe LIC has come to a very critical point. This is as 925 is a very important support, and 975 is a very important resistance. 955 is sort of a box range median. So how I see LIC trading, if by chance it breaks 925 in this go, then it will be falling to 903. However, if it is able to hold 925, then it will be going up, clearing 955 and going up to 975 and 992. So now what I am waiting to see on Monday and Tuesday's trading session is, number one, how the trend catcher indicator goes. If this black line manages to go back below 0, then we're going to break 925 and go for 903. However, if this black line on both of these just flattens out, then we will end up holding this zone, and if it turns, then we'll also end up turning with it. So that's how I look at it. So my trading plan for LIC is pretty simple. I still expect it to continue trading between 925 and 975 for now. However, if it breaks 925, it will have broken a major support and will go down to 903, after which it can go down further. On the other hand, if it holds this, then it can hit 975 and 992 in no time. So if you're an equity trader, wait to see if 925 holds and then take a play. If you're an option seller, or then I would say also wait for to see if 925 holds. If it holds, it's a very good spot to sell P's below 925. However, if it breaks, it's also a very good spot to sell C's above 950, 955. So just wait to see how this line operates. Option buyers, I don't think there's much right now in LIC insurance for you, as it is too tight. My likelihood, I'm only going to make a play on this stock once it makes a decision on this support zone. Next, we'll take a look at Kotak Mahindra, after which we'll take a look at ICICI, as I said. Now, Kotak Mahindra Bank, I'm going to zoom in because it is basically moving in a range. But the reason I chose to cover Kotak Mahindra today is because of the news which has come out over the weekend that one of the managers has stolen 31 crore, one of the bank managers. Now, that naturally will have an impact on Kotak. But what level of an impact? We'll have to see that. Because I'll give you an example of Indices Bank. Indices Bank has had so many scandals, they're in so much trouble, but Indices Bank has not managed to fall due to the support, I would say, the promoters have put in it by pumping in more capital via normal equity markets. So we'll have to see how Kotak operates. But my point of view is, as long as Kotak is between 2160 and 2100, this is a box range move. You're not going to get anything until it breaks above this or breaks below this. In the middle, there is a resistance at 2138, but that is more for day traders and option buyers. So my point of view, number one, small box range 2138 to 2100, main box range 2100 to 2160. So within this range, expect it to continue dealing about. If it breaks 2100, then it's a short to 2070 and a short to 2030. On the other hand, it breaks to 160, then it's a long to 2185 and to 200. What to do if you're an equity trader? Avoid. If you're an equity trader, don't touch Kotak Mahindra Bank right now. Because if it breaks this, then it's going to go most likely touch 2030. If you're an option buyer, wait for it to break this or wait for it to break this. Because your option buyers are looking for smaller moves, so you're not going to hold for the whole month. So wait for it to break one of these. If you're an option seller, either you can, if it opens flat on Monday's trading session, you can sell this range of 2160 to 2100. Sell C's above 2160 and P's below 2100. But if it opens roughly at 2100, then you can go more aggressive and even try to sell C's above 2140 and P's below 2070 to be safe. This is more of an option seller stock right now rather than equity or option buying. ICICI Bank, I'm going to give my view for that now. Now ICICI Bank has been those, as it's one of the bigger boys in the indexes, we can see ICICI Bank has been box range from, like I said, I'll put a line to denote it. The box range in the indexes started from 13th of May, which is here. But the box range in ICICI Bank started way earlier. It started basically from 21st April. So ICICI Bank from 21st April has been in the same range, breaking both equity traders and option buyers. Option sellers will have benefited, but option buyers and equity traders, because so many equity guys must have gone in, got frustrated, booked out, gone in, booked out. Option buyers will have got whacked unless they're intraday players, then they can get something on some days, but there are a lot of days like here. Majority of the days have not even been for intraday players. They've only been for option sellers. Now, how do I see? ICICI Bank is pretty simple. As I said, equity, do not touch it as it's too confused. Equity only consider it if it breaks 1,470. On the other hand, option buyers only consider if it gets out of 1,470 or 1,4505 to 1,415. Now, as long as ICICI Bank is above this support, all things are good, as it has a chance of rising. If it breaks the support, it will have broken a very, very strong support and it will fall very hard. On the other hand, if it manages to clear 1,470, it will rise to 1,506 and go above that. So my point of view, if I say right now, only option sellers touch within this range. Equity buyers wait for it to get out of this. Option buyers wait for it to get out of this or get out of this. Then consider ICICI Bank, as it's been in a box range even longer than the headline indices. As I showed, headline indices from 13th May we have been box range. These guys started in 21st April. So this ICICI Bank has even crossed 2 months of a box range. And the box ranges like Kotak, which are wider, but ICICI Bank has not even been a wide box range. It's been a narrow box range from more than 2 months. So equity, you buying it now, you're basically buying to sit and vegetate yourself. So that's it for today's trade video. We'll take a look at how the market does this week, and I will most likely post a midweek video also, and let's see how things go. If you like the video, then hit that like button, subscribe to the channel and click the notification bell. Thank you.